and welcome. I'm Shivani, and today we are going to discuss a topic which is a burning issue throughout the world. The newspaper columns are filled with information regarding this matter. But before I begin, let me give you a disclaimer which you ought to know. I'm not a SEBI registered financial advisor, and this video is solely for educational purposes. It does not intend to make anyone buy or sell in the market. So, without further ado, let's get started. As we all know, the USA has announced reciprocal tariffs for 50 odd countries, including 27% for India. However, a day after the announcement, a White House document showed the tariff of India was revised down to 26%. Seeing the imposition of tariffs by the United States of America, China retaliated by imposing additional tariffs of 34% on American goods. This has led to the commencement of a trade war, which will impact the global economy adversely. The world GDP will take a beating as exports and imports will be impacted, leading to a decrease in the overall GDP of the world. Firstly, let us see the positive effects of this imposition. We all are seeing that Donald Trump is imposing tariffs after tariffs, but we aren't trying to understand the reason for this act of his. The reason is the fiscal deficit of USA. USA has a huge debt to pay off. And in order to pay off that debt, Donald Trump, after coming into power, has taken this measure in order to make his economy flourish. Furthermore, if we talk in context of India, after China's retaliation by imposing additional tariffs on American goods, China's export sector has shrinked a bit. As a result, India's export sector has some chances of seeing some light and gaining some perspectives. Okay, now coming to the negative effects, we have a lot to talk about. Firstly, the demon who is eating into our savings every day, inflation. Inflation will rise, and this will have an effect upon the demand and supply of commodities. People will have less money to buy discretionary goods. What are discretionary goods? Goods which can be bought according to our discretion. What will happen is that since life saving drugs have inelastic demand, people will be forced to buy them in spite of rise in prices. And as a result, they will have less money to buy goods having elastic demand. And therefore the demand for these commodities will fall. Secondly, the financial markets have seen a huge plunge. Nasdaq, we all know Nasdaq is entering into the bear zone, and investors who had invested in large amounts on stocks in expectation of higher returns are suffering losses. Furthermore, talking in context of the crude oil market, due to increased tariff, the world GDP will come down, and also the business activities in the world, which have resulted in bearish sentiments, will impact the crude oil market. In fact, we are seeing the crude oil prices coming down recently. Furthermore, the software industry of India derives a huge amount of revenue from USA. And what will happen? The software industry, that is the IT companies, will suffer a huge setback. India's $280 billion software services industry is likely to be adversely hit by the Trump administration's levy of reciprocal tariffs. Now, let us understand the effect solely on India. The FMCG companies, which solely depend on domestic consumption, like Hindustan Unilever Limited, ITC, these companies will not be impacted much by the bearish sentiments which have started to engulf the world. But if these circumstances continue to exist in the long run, it is quite possible that these companies also join the party of bears. Furthermore, when we compare the tariffs imposed on India with other countries, it is comparatively lesser. But tariff is like fire, and our house is burning slowly. Other houses are burning faster. But at the end of the day, all houses are burning. So whether the intensity is low or high, it will lead to damage. So the overall damage of this imposition of tariffs on the world economy is negative. And of course, the party of bears is on. Investors who had invested in huge amounts are suffering, while some are finding opportunities to invest in this bearish market in order to gain in future. The situation in India's equity market is worth being understood. Last year in June 2024, when the election verdict was announced, the market plunged down to 21,000 plus mark and took support over there. This time also, I think, as per analysis, that the market will take support at the same level and try to move higher from there. However, if these circumstances and the trade war becomes uglier, there are high chances that we may reach a level of 18,000 plus in Nifty from where the entire rally started. Furthermore, let us take into consideration a major industry giant, Reliance Industries. It has basically four verticals. And over there, geo and retail may remain immune, but the petrochemicals, oil, and energy sectors may be affected adversely because geo and retail depend on domestic consumption, while all these depend also on foreign consumption. And due to tariff imposition, these will be affected adversely. In conclusion, we must understand that this trade war has more to do with the fiscal deficit of USA. Everybody loves his or her country and tries to help the country in flourishing. And that's the reason why, after coming into power, Mr. Trump has devised a plan to increase the coffers of USA. This is the time where we must analyze the market properly and decide where and how much funds to invest in the markets. So, I hope that you got all the relevant information, analysis, and perspectives of this particular topic. Thank you for watching.